where the hell are we going to get the batteries? And those guys that have do the batteries, that make the batteries, they need to get a hold of cobalt and lithium and stuff. Where are they going to get their prime production? So you get the bright idea. Let's buy some mines. Well, guess what? In the copper market, you have a universe of seniors, mid tiers, that already that have been doing this for a very long time, operate mines, have built mines, are seeking financing to build new mines, and these are big projects. So it's easier to identify. In lithium, what do? Who do you call?
Ghostbusters.
Yes, so because there is a serious problem.
Hey, we're back with another episode of the Deals podcast with your hosts, Lucho, Saenz, and Paola Rojas. Today, we're going to talk about a new Sprott note on EVs, about deals made between miners and top automakers, such as Tesla, and in both copper and lithium. And we're going to close with an analysis of whether copper or lithium stocks are the best way to invest in the energy transition theme. Hello, Lucho. How are you?
Hey, Paola, how are you?
I'm good. We wanted to get started with this recent note, Sprott's note on EVs. Do you want to get started?
Yeah, sure. I mean, this isn't a new subject for us, right? I mean, we've talked about copper at some point. We've talked about lithium at some point. But yeah, I mean, this Sprott article basically made the comparison of the growth that needs to happen in the copper sector versus the lithium sector, and obviously, at least obvious to someone that's been following the lithium market closely, the increase in supply potentially in lithium is a lot higher than the increase in copper needed to meet the demand, whatever the demand may be. But there's some fundamental differences between the copper market and the lithium market, which I think are worth touching on, that make the discussion a lot more interesting and potentially dynamic, right? About what's going to happen, and that leads us to sort of the thesis around, where the biggest deficits are going to be, and where the biggest investment drive is going to go to.
It's becoming something that it's not only discussed in the mining circles, it's just becoming a little bit wider. And a few I wanted to mention a couple of points from the note. One kind of super meaningful metric that we can mention is, so by the close of 2022, the global EV fleet, totally was over 26 million. And this is 60% growth from 2021 and 5 times growth from 2018.
I remember when I actually used to trade copper, right? I mean, and we looked at all of the numbers, and when you trade copper actively, or when you trade anything actively, you take a look at the charts and everything. And I remember, my boss at the time, who was actually the trader, I was a junior guy. The trend is your friend, right?
Yeah.
I mean, let's not question the trend. I mean, the trend is electrification. The demand will be there. This has been known for a very long time. I mean, you and I were introduced to that electrification thing back in 2009 when we were starting to look at lithium in Argentina, and then we chose the project in Chile, right? Maricunga.
Yeah.
So, I mean, at that time, I remember going to Seoul to talk to the guys from POSCO, and they gave me this great presentation. And I mean, they saw it clear as day back in 2009 that electrification not only meant the automotive vehicles and electric buses and trains and stuff like that, but it was the power grids and the potential of or the need for storage of new energy, right? And that's what Tesla sort of try to promote through their battery making efforts and business. So again, going back to that, I mean, the trend is your friend. I mean, the electrification is here, and electrification is going to need a whole bunch of stuff. Before it was, people just focused on lithium and other critical metals, cobalt and stuff like that. But now it's copper, it's nickel, it's everything, right? But the markets are very different. Copper is a very mature market, right? I mean, it has a life of its own. It's always had a life of its own. I mean, before you talk lithium and you're talking, bipolarity, right? I mean, who needs it? I used to joke around that the players are still few and far between. The technology to extract lithium is relatively new and up and coming. Okay, and hasn't developed as quickly as it should have, right? I mean, back in 2009 when we started looking at it, at this market, everything was evaporation ponds, and that was the technology, which isn't really technology, right? You concentrate through evaporation. I mean, there's not doesn't get more basic than that. The direct lithium extraction technologies were new, were up and coming, and they're still in a developing stage. Okay, you have very few actual big players. You have a whole bunch of projects, and now everybody has, lithium projects are coming out of the woodwork, right? And one of the things that I used to say when we used to market lithium, market our project, was that lithium is not a scarce resource. You can find lithium all over the place. It's just a matter of whether you can extract it economically or not. So, I don't know. I mean, I see a very market differentiation between the copper market and the lithium market, and the implications about how those are going to be fed into the supply chains, right? In the end, you have copper projects and you have a dynamic copper market, and that market is going to react typically through price to the supply and demand issues, and though rising prices means that more copper is economic, lower grade deposits are economic, they get invested on. There is obviously new technology as well that improves copper, in terms of recoveries, and treats lower grades or treats difficult copper deposits with arsenic, etc. But you look at the lithium, I don't see it, Paul. I mean, I really don't see where the hell we're gonna get all the lithium that is needed, despite the fact that there's a whole bunch of projects. The technology is getting there, or so everybody hopes. The size of the projects are sort of there, or so everybody hopes. It's all a bit of hope, right? I mean, Bolivia just did some deals with, a Chinese consortium and a Russian consortium, and they're talking about these two plants that are going to produce 25,000 tons per year each of lithium carbonate. That's a pipe.
Yeah, and the funny part about that one is that, people believe that that's actually going to happen. And honestly, I'm sorry, but I don't see it.
I would love to believe that.
I would love to. I just don't.
Turn my country around, but you know what? It's not going to happen.
Yeah.
Because things just don't happen that easily, particularly with the Bolivian government. I'm sorry, so we need to be very realistic about what actually could come in terms of lithium supply or not. And then, you go into the, all these deals that are happening, right? I mean, the automakers making investments in, in copper and nickel and lithium. And it's like, wow, I remember back in 2009, I mean, we visited Tesla, and I know a couple of other, junior producers visited Tesla, and we had long conversations with Tesla about, the future and how to structure a transaction that would basically give them the lithium carbonate that they would need in future, et cetera. And the biggest problem at the time was that Tesla was unwilling to invest in the advancement and development of projects. They were like, I'll give you an offtake deal when you're in production. Well, that's great, but how am I going to get from here to there? If I don't have money and I'm a junior company, I have to build a project for hundreds of millions of dollars. You're giving me an offtake contract. And, a number of those, were signed with Tesla and a couple of others. And I remember at a conference in Toronto, I think it was, I said, those offtake contracts aren't worth the paper they're written on. And people were looking at me like I was, a Martian, like I was insulting them. But the truth of it is, none of those contracts in the early days, in the 2009s, 2010s, 11s, 12s, none of those contracts resulted in a project coming to fruition. None of them. Where the hell are we going to get the batteries? And those guys that have do the batteries, that make the batteries, they need to get a hold of cobalt and lithium and stuff. Where are they going to get their from production? So you get the bright idea. Let's buy some mines. Well, guess what? In the copper market, you have a universe of seniors, mid tiers, that already that have been doing this for a very long time, operate mines, have built mines, are seeking financing to build new mines, and these are big projects. So it's easier to identify. In lithium, what do? Who do you call?
Ghostbusters.
Yes, so because there is a serious problem in that market in terms of where it is. The saving grace, Paola, is that there are a lot of projects out there, right? And whereas before, when we started off, we were looking at, you can't really bring a project into production unless it has at least 500, 600 ppm grade when we talk about brines. That's changed. People are looking at 100, 200 ppm like it's high grade. People, the 1000 ppm of lithium is like the 2.5% copper grade on an open pit. That's just a dream come true.
Yeah.
Right. The 100 ppm is like the 0.4 copper grade in it. The difference is that that 0.4,
yeah,
that 0.4 is actually making money, and you don't need $12,000 copper for that to make money. All you need is $8,000, $8,500 copper, and that makes money and a decent rate of return over time. Okay, that's a very basic difference between the lithium and the copper markets. And I really hope that those number crunchers out there that are looking at the 20-year perspective, and objective, have that in mind when they start recommending investments to some of these big companies, right? Because there are some big tickets being written out there, and all of a sudden the automakers are becoming competition to the private equity guys and to other miners. And really, the smart money, converging into, let me get the right partner, hopefully a producer already, the right situation with the right project, and that long-term view, and you start making decisions. Something that Tesla could have done 10 years ago, didn't. Oh, yeah, they did quite well anyway. There was a lot of shareholder value created there.
Yeah. I wanted to add a little bit more detail in terms of why this is happening. As you talked about why this is happening now, but it didn't happen before because it wasn't necessary. Basically, it wasn't necessary because anyone needing these materials could just go back and in the market and just buy. But now, because the growth is needed is so rapid, they're needing to have offtakes that are actually valuable, because they're actually there's more probability that it's going to be certain. And as you said, like you don't, just because you make an offtake agreement doesn't mean that you're gonna have the material. So these automakers are having to make not just one but multiple deals, and we've seen that. But the different thing that we're seeing in this cycle too is, we have the offtakes, which we've seen before, but we've seen with sort of more stringent conditions, the covenants are more stronger. And also the change is, you said, Tesla should become a miner, like, and that's something that a lot of people have said. And in a way, they kind of are doing that. Not Tesla in particular, but a few others have gone into that trend because they are actually getting stakes in miners. So you have GM with putting 650 million in Lithium Americas, and we've talked about this in previous episodes as well. Then you have Volkswagen did set up a company specifically to work in batteries, but also to get stakes in miners. Mercedes have said they are open to to invest, and they have, I think they did a deal, Volkswagen and this other group that was backed by Glencore, in turn back the nickel acquisition in Brazil.
Guide what these forward-looking companies, let's call them the automakers today, because they're the players that are making all the noise, need to make are decisions about how they get that exposure to the raw materials in an intelligent way.
Yeah.
Okay. Because again, in terms of copper, you're going to have a universe of senior and mid-tier companies that you can talk to for future offtakes and be creative. And really, it's about being creative, because the seniors and the mid-tiers, they have access to capital. Most of them have access to cheap capital. They are looking for tier one projects that are difficult to get. They're expensive to get. But even if someone else puts up the money, they need to show IRRs, long-term plans. It's more than just volume of production, right? So I mean, when you talk about particularly the senior guys, they have a criteria for what they're going to be looking for and what they're going to be doing. So you need to be creative in terms of being the off-taker of the raw material about how you're going to do that, and how you're ultimately going to get a hold of something, how you're going to get hold of metallic copper, or the final stuff for the lithium ion batteries from a brine or a mine in the Andes in Peru. Okay. It's not that simple. I mean, putting a checkbook into a deal that Glencore does in Brazil for nickel doesn't translate into nickel cathodes, and much less into nickel finished products that are going to go into these batteries. So I actually haven't looked at that, but there's a lot more involved. But the real concern on the lithium side is, where do you get this, the seniors and the mid tiers in lithium? You've got four, right? They are the usual suspects. And the technology you mentioned, I mean, Livent has been using it for a long time in the Salar del Hombre Muerto, but in the rest of the places, I mean, the technology, there's some big names backing the technology, and whether it be funds and stuff like that, but you have to extract the brine, apply the technology, test it out. Okay, that plug and play thing, I mean, that's going to take a while, and it's going to take money. Okay. And it really depends on how quickly you need that offtake. I mean, when we were looking at Maricunga, the big thing was first to market, right? I mean, you wanted to be the next guy producing lithium, and really your competition there, if we talk about Maricunga in Chile, it was Lithium Americas Cauchari, okay, which at that point was barreling along to produce, and they've only started producing this year. It's taken them a lot longer than they expected to produce. I mean, if Maricunga had started construction when it was supposed to start construction, if it wasn't for the Chilean legislation and that whole show that's going on there that has completely stunted the lithium production in Chile. Okay, I mean, if it wasn't for that, Maricunga would be producing. But basically, to go ahead with that, we couldn't really test the new DLE technologies. I mean, POSCO had moved on, etc. So we were stuck with evaporation technologies, and that's what we went for, and that's what we got our permits for, and stuff like that. I mean, and because Maricunga is high grade, if you will, 1200 ppm, you could do that, and you would make a very good return on the project. Okay. Fact of the matter is, if you wanted to look at Maricunga now and you wanted to say, I want to apply the DLE technology because of increased returns, because of the environment, because Chile will love it, because of this, that, and the other, you could do that because you haven't lost any time. But you would have to go through the permitting process once again, right?
Mm.
So you're talking about different delays. So the lithium market, the fundamental problems in lithium market are lack of companies that have done it and done it successfully, and lack of projects that are advanced enough that can be tested with that direct lithium extraction technology to be able to say confidently, this is going to work and it's going to produce 10, 15, 20,000 tons of lithium. It's great for someone, for a consortium of companies to go to Bolivia and do a deal with the government and say we're going to build this, $800 million plant that's going to produce 25,000 tons per year. The only saving grace that Bolivia has is that these consortiums, or at least the Chinese consortium, is a very strong Chinese consortium that has the money to do whatever it wants to do. But it took Bolivia 10 years to do this.
And
right? I mean,
and China has a long horizon. So maybe we'll do it in 50 years. It's fine. Yeah, but for the rest of the world, 50 years is too much.
And for whatever it costs, right? So I mean, you take one of the largest, or the largest lithium reserve in the world, which is Bolivia, and you've taken that out of the market, right? Because that lithium carbonate is going to go
There's still resources, though. There's still resources because
but that lithium carbonate is going to go to Russia or China. It's not going to go. Unless unless Mercedes and Volkswagen are going to be putting up their plants in China and doing a deal with CATL for the batteries. I mean, they're not going to see an ounce. They're not going to see a ton of that lithium carbonate. So it's a very different market. And in Argentina, you have a lot of resources. We talked about Argentina our last podcast, and as negative as I was about Argentinian politics and stuff like that, one thing is for sure: Argentina has the deposits, and those deposits will produce. Okay, and they will produce in time. But you have to start taking a look at, in the hands of who are these deposits. First of all, you have to take away the emotion of market value and blah blah. You have to take a look at those deposits for what they are. They are lithium deposits. They're brine deposits. You have to take a very hard look at what technology you're going to need to extract these. If they are, too low of a grade, I still think. Well, then again, when we were looking at Argentina way back when, 2009, 2010, lithium prices were around $4,000 a ton, went up to $8,000 a ton. No one could believe it. When you talk 30, 40, $50,000 a ton, it really doesn't matter, right? Anything is economic. But you still have to question whether 200, 300 ppm on the other side of the Andes, having to cross over to the Chilean ports to be sent. I mean, whether the lack of infrastructure, transport costs, for both for the intakes and for the exports, how that's going to work out in terms of your cost base, to see how feasible it is to take these projects forward, and how the direct lithium extraction fits in there, right? I mean, there's a lot of question marks around that, and sometimes you come across a report saying, well, lithium prices can't stay up because the demand is going to be satisfied because there's so many projects. A project is a project, okay, and it comes into production at some point in time, but that point in time is not going to be anywhere near where you expect it to be when you enter the project. And you've seen a lot of junior companies with lithium projects saying, I can be in production in 3 years' time. And it's like, what color is the sky in your world?
A lot of people coming into the sector, having to come into the sector, like automakers and these other players that really trust and believe that, if we say this is going to work in 5 years, yeah, it's going to work in 5 years, and usually it doesn't. So it's kind of and I don't think it's just the fact that it's just hard to do. It's just there's so many different variables.
Let's talk about the Lithium Americas and GM deal. Okay, I mean that I actually know some of the guys in Lithium Americas fairly well, back from my days in lithium, and and I used to talk to a couple of those guys. We used to talk about Tesla and the future and the offtakes, and they've done it. Okay, but take a look at what they've actually done, right? I mean, GM wants the advantages of the Inflation Reduction Act. So I mean, they want to focus in the U.S. project, and they want to focus on Thacker Pass. Great, right? They don't want to be looking at Argentina, probably because it's Argentina and because the Chinese are involved, etc. Okay, but back when Lithium Americas was, testing POSCO's technology, or POSCO's technology was testing, was being tested in Cauchari, and there were different ways of doing this. Even when they started doing the deal with the Chinese, right? Lithium Americas was a much smaller company, right?
Mhm.
Now, GM has done a deal with someone who has a project in Argentina that's been built, that's being commissioned. Okay, so there is a development expertise. They're going to be separating the two into two companies so that Thacker Pass is North America, and that brings a whole bunch of different types of investors. GM, being a shareholder, brings a whole different class of investors into Lithium Americas. Lithium Americas is not a junior company anymore, right? They've had the expertise. So yes, you have an execution risk on the side of Thacker Pass and Lithium Americas, but that's a much cheaper entry, okay, than trying to do a deal with SQM or Albemarle.
And at the same time, that risk has been reduced because of GM's involvement. So the fact that
Of course, I
you
mean,
have such a big player, the issues that they were having, the delays were like, okay, this is, come on, let's get it. And you have the IRA, you have like, oh, we need local supply, and like, okay, let's approve this, which it was delayed in my view in a way that wasn't fair to what they were doing. So
and I mean, to their credit, they advanced it when many people were doubting. I mean, the typical Nevada projects that juniors were touting had very low grade and were pretty much moose pasture. Seriously, I mean, they were trying to you're trying to jump on that lithium bubble. You were trying to jump on that wave, and ride it for as long as you could. And anything that you felt had lithium on it, you wanted to put it in a portfolio, right? I mean, um, uh, again, the the lithium market price volatility has been amazing, right, in the last few years, and that's not normal. That is actually a sign of a market that is completely immature and unreliable.
yeah Yeah.
Right?
Yeah, absolutely.
Yeah. Those price movements only come because there's not enough supply and demand.
Yeah.
Okay. And there's not enough transparency around that. And that's going to have to change.
Yeah.
And that happens with time.
Okay. But we wanted to close today with a little bit of our insights into whether copper stocks or lithium stocks are the best way to play and to invest in this theme. And I'll just read a couple of points that I have made here. So we have the investment for the sort of energy transition theme in 2022 was around 466 billion, and that was about 54% more than the previous year. The market size, if you compare both markets, so you have copper was for last year, for 2022, was around 180 billion in market value, the total production. So you take the total production and the current price, and that was calculated in June. Versus lithium, around 9 billion or so. So there's a difference in scale, a significant difference. And the last point before I hand over to you was that BHP was seeing or is thinking that we may need to invest up to 250 billion for copper only by 2030, in the sort of expansion, development, and exploring for new deposits. And Benchmark Mineral Intelligence says that the same figure for lithium could be between 50 to 100, 120 billion. So these are two sort of, that's the setup in terms of there's a lot of money that needs to go into the space. And what do we think that, what's the best way to play this theme, whether you go with one, whether you go with both?
Let's put it in that the expected annual growth rate, or the needed the CAGR, right, that they were mentioning in the Sprott, is much higher for lithium than for copper. Okay, I think 16 to 20% for lithium versus 7 to 8% for copper. I mean, that is just obscene, right? I mean, that's a growth rate that cannot be met with supply. So I think that lithium stocks have a greater chance of appreciating than copper stocks, to be honest. It, not only because of the expected growth, but also because of what we were talking about, the different things that we were talking about in the podcast. Now, rather than playing stocks, to be honest, I mean, I would just buy copper futures or lithium futures, and just hold them, because it's, today with ETFs and stuff like that. I mean, you have better ways or simpler ways of examining that.
Yeah, no, I think it's a fair alternative. I think it's probably for in my view, I think you need both. I agree that lithium has the potential, as if you look at the market as if they were an early stage, a startup, a junior mining company. They're small, hence they have the potential to grow more, but at the same time, obviously they have more risk. So it's a similar assumption you can use. Copper is going to be more established, but it has to probably double. At least that's what BHP keeps saying, and that is challenging growth, but it's not as challenging as having to grow. The way that, the way that lithium needs to grow. But I think it's a I don't think a lot of people do that, but given we do have options now, so before 2021 or 2020, when these futures were launched, we didn't have that option. But today we do have that option. So anyone considering that alternative, I think is a fair option. And for lithium, copper we've had for many years.
Yeah.
I think all right. I think we've talked enough. We're gonna we should
Yeah. Enough Sunday night. That's for sure.
Yeah.
We will
All
see you in
right.
2 weeks. And for those listening, please let us know if you have any questions that we can answer or any topics that you want us to cover the next time around.
Yeah. All right.
Thanks,
Bye,
Paola.
Lucho. Bye. Lucho and I will be back in 2 weeks. Until then, here's another related episode you may like to watch next. Bye.